Hey guys, welcome to our July monthly update where we talk house prices, interest rates and stuff about the broader economy. Obviously the big news this month was the OCR increase to 2.5%. The market was pretty split in whether or not there would be an increase. The economy is still relatively weak. The Reserve Bank came out with the change, but also acknowledged that, they're not really seeing too much coming through the economy yet in terms of recovery. But the seeds have been planted and they're expecting the recovery to really start to emerge later this year into next year. For me, we've still got the election. That's going to keep uncertainty there for the rest of this year. It's very hard for businesses to make investment decisions when they've got such polar opposites in terms of policy and the implications for our country. So I'm expecting a muted response for the rest of this year with a reasonably strong recovery next year once we settle down post-election, which is good news for all of us because this has sure been a long and hard recession. In terms of how that plays out in the housing market, there's a really good article on our website at the moment called An Anatomy of a Housing Crash. I've gone back and looked at a number of housing crashes, in particular the GFC and this most recent one, as well as I think the 87 share market crash around 92's there as well. And look, what they all show is that even when interest rates fall, these recoveries do take a while. For the record, this is the worst housing recession we've seen in modern history, and it's tracking worse than after the 87 share market crash. Just to give you a feel for why it does actually feel quite tough out there. I mean, we've experienced house prices, real house price reductions close to, or in some places over 30% now, and that's pretty hard to take. What we expect to see is that recovery is now starting to kick in. For house buyers, I think this is possibly the best house buying that you're going to see. Certainly in Auckland and Wellington. In Auckland in particular, there is an overhang of completed housing stock that is absolutely holding prices down at the moment, and I'm seeing some incredibly good buying out there. If you're a first home buyer looking to get into the market, I don't think there's been a better time. Expect house prices to sort of bounce around the bottom for a bit longer, certainly whilst that excess stock clears out. You're not really going to see a strong recovery in the housing market until confidence comes back. I think we'll see that confidence emerging over the summer break and into the new year. Bear in mind, we've got quite a strong agricultural sector at the moment that is gradually flowing through the rest of the economy. We had the big Fonterra payouts. We've got, really high sort of dairy prices and red meat prices that's flowing through the economy as well. We've still got relatively low interest rates. And then we'll just get that broader recovery coming through next year, and that will set things off. For house prices to increase, it's a combination of confidence, low interest rates, and then immigration coming back. And I think if we look at immigration coming back, that's fundamentally about job creation. And job creation comes back to business confidence and business investment. Again, we're not really going to see that in a big way this year, other than in the agricultural sector where it's already starting to play through. But we will see a broader based sort of business confidence recovery investment coming through next year that will create jobs, that will drive immigration, and then we should see a bit of an upswing. Not like we've seen in the past. We've had 20 or 30 years now of falling interest rates and debt-fueled growth. I think that's not going to repeat in quite the same way. What we're going to have is a gradual recovery, increasing house prices, gradual recovery, recognizing that in real terms, house prices are down 30%.